How Web3 empowers fintechs in terms of decentralization is really massive and yet very simple. Firstly, funding. It's much easier to raise funds for a Web2 or Web3 financial service or for any product at all on Web3 than it is to raise funds for a Web2 or Web3 financial service on Web2. Why? Web3 throws out the funding tables once held by a few elites in closed doors and replaces it with a more transparent table where everyone can participate regardless of their age, financial capacity, or nationality. This means a lot for existing fintechs and emerging fintechs, and even folks doing something outside that bracket. The more community-owned a lot of public-serving projects become, the more public-centric they become, rather than being likely to be manipulated by a bunch of elites or stakeholders who want to rip off the public. Yeah, it's time to build public to public. We can see a lot of Web3 lending protocols pull funding from users and offer incentives and interest to them when other users come to lend. Such protocols don't overstress themselves, though they have a very delicate work to do. They don't give beyond what they have. They have collateral assets to quickly settle defaults without putting the initial funding users at risk, and everything is readable and accessible on the blockchain. Imagine a bank that shares profit with you when its services are used, rather than keep it all to themselves. TradFi needs to level up to this. It's time to build public to public. Stepping up to Web3 means upcoming fintechs don't have to lose their customer-centricness to please a board. They don't have to restrict themselves to limited amount of VC pool. The blockchain makes it possible to access a wider and global pool of funding and users, which means more liquidity. You'd ask, how can Web3 empower a fintech in Africa right now? Give me a bank. Let's take a bank, and how can Web3 empower that bank? Okay, let's call the bank Butter Bank, and I'll give six examples that could really help, whereby Web3 could really help push such a fintech upwards. Number one, they could start a DeFi lending service, whereby they take crypto deposits starting from a minimum. Say customers deposit 5,000 Naira worth of Bitcoin to get 70% the value in stablecoin or in Naira, or keep trading. They get to keep trading or to meet urgent needs. So when the Bitcoin they deposited falls to 80%, the customer gets liquidated. This could be contained in the terms and conditions. Deposit 50,000 Naira worth of Bitcoin, gets that 5,000 Naira worth of Naira or stable coin, and the bank could actually save against a crash or a dip. Secondly, they can also start a P2P service, or give out agency licenses to P2P traders. So we have P2P flowing from everywhere. We have P2P on different services, from this service to that service. But imagine if those P2Ps could actually be done at your bank. You could just go to your bank, write that you want XYZ amount of money to be moved to your crypto wallet. You need this XYZ amount of money to be moved to your crypto wallet. Then from a bank account. Or if they don't want to put their hands in P2P, they could easily offer agency licenses to P2P traders. I remember when I was doing a P2P hedge fund, whereby I was running a P2P service, about 6 figures. But then I was like, hey, see, one day my bank could just block me. Why block people when you could actually even earn from what they do? So rather than block people doing crypto services, why not just give them a license that they could renew, let's say yearly? Let them renew these licenses yearly. So so you can say, they can verify that, I'm not fraud, I'm just a P2P trader. You could easily give them licenses or just run P2P services and earn a lot on fees. Number three, the bank could offer a fiat to crypto, or it could offer a fiat to crypto or crypto to fiat service. So they could easily say, hey guys, you could just attach a crypto address to your bank account. So once money comes to your crypto wallet, once any crypto comes to your crypto wallet, it could automatically change to Naira. Or once money comes to your Naira, it could automatically move to crypto. They could easily offer this service and make good money on fees. Web3 also makes it very easy for on-chain financial analysis. You could easily see what I do. You could easily see how much I've transacted. You could easily see how much I own. Lots of people do proof of funds and statement of accounts, and you see lots of these things are very are not really clear enough. TradFi manipulates these things, and proof of funds and statement of accounts, majority of them are not what they truly claim to be. But then you can't alter what's on the blockchain. You can't change the year a transaction was made, and this makes it very easy for you to analyze my finances and probably give me a loan or something. Number 5, they could easily use it to raise funds. Number 6, they could also insure crypto projects. Oh, Tunde Abbas wants to do a crypto project, or he wants to do an NFT project or something. Tunde Abbas is our customer. He has 5 million naira in his account. We would insure him. Oh, Tunde, you can add 5 million naira more to this project you are doing, and we can insure you in such a way that people can actually transact with your Web3 project. You can do what they want to do, but then don't collect more than 7 million naira. And if Tunde's project fails or crashes, we collect. They'll just liquidate Tunde's account and give it to everybody who participated. That's one of the coolest ways, I think. You could easily empower fintechs really get empowered. So they could just collect an insurance fee, issue an insurance certificate, so that everybody really trusts the project. We've had a lot of failed projects in Nigeria that like a lot of Ponzi schemes and a lot of things like that. But then if banks could really insure crypto projects and say, hey, we've got these guys back, these guys are customer, we are very confident of what it does, and if anything goes wrong, we would definitely refund at least maybe 50% of what everybody has invested. It makes banking very much easier. It makes fintechs more empowered. It makes trust flow through both ecosystems. It's a two-way street. The banks need the fintechs needs Web3 as much as Web3 needs the fintechs. We can't ignore how much of limiting factors. We can't ignore how much of a limiting factor that governments actually are. But the bank can truly dialogue if they truly want to. Let them press for a trial period and assess the risk. The reason banks moved into mortgage, agricultural funding, LPO financing, intercontinental banking, and even recharge cards was simply because their customers were involved in these things. Even betting, they approve of betting, they facilitate betting, NEPA bills, but they need to realize that this generation is a force, and lots of us are using crypto and blockchain services. And both of us are stuck. The banks are stuck, the fintechs are stuck, we are stuck. We need to find opportunities. We are blocking each other from having opportunities if we do not identify the blockchain as something that Web3 should, be a part of. So these are ways Web3 and fintechs could really, really blend. If you want to learn more about Web3, follow Bloom1. Thank you.